Good morning, good afternoon, good day. Welcome to my weekly market roundup, 27th September 2020. I am Sagar Nandi. I used to work in IT. I have retired. I am swing trading stocks using Q systems and techniques. I regularly share my stock analysis and market analysis using live systems on different forums. One is my traders forum, sagarnandi.com. My YouTube channel, Trading Profitably, and my Twitter handle, Sagar Nandi. And this is my email ID, tradingprofitably@gmail.com. All these resources are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Please let me know using the YouTube live chat panel if you are able to hear me and see my screen. I'll continue. This is a live session. I have not prepared for it. Together we'll look at oil and gold, some of the global markets, and then the USA market, sectors, industries, and stocks, looking at the market situation and if we can find any suitable trading opportunities. These are the systems I use: Q Elite and Q Global Q Finder for technical analysis. Q Elite runs on TradeStation. Q Global Q Finder runs on Metastock and Zenith Data. I use Q Vital for fundamental and peer analysis, Q Edge for sector industry rotation analysis, and Q Index for market level index analysis. That was the last slide of my presentation. Let me continue with the live system. Today, first let me go back to my Twitter page, Sagar Nandi, and review the performance of the Schwab account that I was sharing for a while on my Twitter page and in some videos. This snapshot I shared was as of 1 week ago. Sorry, not 1 week, 1 month ago. At that time, the account had 64% profit, trading mostly stock or stock equivalents. No highly leveraged instruments, no futures, certainly no forex. What I pointed out is that whether the market was moving up or down or sideways, my equity curve was steadily going up. I didn't have a single month of loss. In between, I had some losing trades, that is expected, but I didn't have a single month of loss and my equity curve kept on going up. That is an important aspect and proof of successful and consistently profitable trading. This month is going to end in another few days, and in the next traders meet, Wednesday traders meet, I will share my result again. Though after that I may stop sharing the data. It is becoming more and more difficult to manage this demo live account and also my other trading accounts, but at least for this month, let the month end, I will show. And as you may guess, in spite of the market pulling back for probably 3 weeks in a row, we look at the market, my equity curve still went up. There are no secrets. I share my trading ideas analysis regularly. If you say what is the secret behind the consistency, be it up market, down market, sideways market, that may be coming to trading discipline. Of course, use of a robust system and technique is a given. Once you have that, the rest may be coming down to discipline. And just a few days ago, I conducted a tutorial on how I plan and manage trades and risks using Q diary. You may or may not use Q diary because it needs definitive live data, but the concepts I shared in this tutorial video, I believe it is immensely helpful. Irrespective of whether you are using Q diary, irrespective of whether you are using Q systems at all. So long as you are using a robust system and technique, you may review the material I shared in this tutorial, and I am certain that it will improve your result. Whatever be your current result, you will improve your result. Of course, some of you may already be maintaining a nice journal of your trades. Then you already know the value of that. For those of you who were not maintaining a journal and periodically reviewing the journal to learn from it and find your own approach, you may review this tutorial. That may be one secret behind my consistently profitable result. I will share my this month's result also after the month is over. Now let's look at the market as usual, starting with the global markets. Australian index AXJO. I'm using Q Global running on Metastock. It was moving sideways, and remarkably, even now it is continuing to move sideways. It displayed a bullish headwind signal 3 days ago. AXJO, there is a memory resistance. If it can break out of the resistance, there may not be any low risk setup in the AXJO itself. However, you might consider some breakout trade in individual stocks that are fundamentally strong if the breakout happens in AXJO. Right now it is moving sideways. Japanese market topics index, it is also moving sideways. It's inside a triangle also, bound by support trend line and resistance trend line. There is another resistance very close to price. Last couple of days price is moving in very narrow range. Not a time to try to take trades in topics. The weekly also has support and resistance trend line. China's market CSI index, CSI 300, it was in a range and that is continuing. Only India market was in an uptrend, looking at it using the Nifty index, Nifty 50. Last YouTube live session, I showed it was starting to topple over. Started to topple over. However, I don't like to take the first downward breakout, as I mentioned in the last video also. If price now goes up little bit, then comes down again, that may give a low risk shorting opportunity, provided all the requirements for go with flow short setup are met at that time. Right now there is no trade setup. It broke below the watermark support. However, it found support at the white direction line, displayed a bull release signal on Friday. There is no long trade setup. The weekly backdrop color is bearish. Therefore, I would rather wait for it to go up and then if it comes down. That may give a go with flow shorting opportunity. If not in Nifty 50, if not in the index itself, in weak fundamental stocks in the India market. India market is not also in an uptrend anymore. If you look at the daily chart, it has lower high and lower low. Therefore, for short-term trading, it's not in an uptrend anymore. UK market FTSE index, it was moving sideways. Several times it tried to break below that range and it recovered all of those times. Now it broke out of that range again. We'll see if it recovers or not. This is also moving inside a range because it has trend line resistance and trend line support. When that happens, it's difficult to take a directional trade. There is no Q trade setup in FTSE right now. Let's look at gold using the ETF GLD. Gold has lower high and lower low, therefore it is technically in a downtrend. Interestingly, the bearish headwind came right near the very top. I explained that we could take or consider taking shorts either in GLD or using gold mining stocks at that time. Now it is at the lower boundary. It is oversold for 5 days, shown by the stretch band indicator. When something has already fallen near the lower boundary level and oversold for so many days, I don't like to initiate a new short. It is looking weak, however, too oversold to take a short trade. And because it is weak, there is no buy trade setup. There is no Q reversal trade setup also in gold. Looking weak, but oversold, no short trade setup. Oil ETF USO. Earlier I mentioned it was moving inside an extremely narrow range. That is continuing, moving inside a range. Not a time to take any directional trade in oil. Let's look at the USA market. S&P 500 ETF SPY, and now I am using Q Elite running on TradeStation. It came below the lower boundary on this day, then displayed a bullish headwind signal, tried to go down next day, however on Thursday and Friday recovered. Friday had a bull release signal, however it closed right below the trendline resistance. That's why I'm not going to take any long trade, and it is in a downtrend, however close to lower boundary, therefore I'm not going to take any short trade also. The weekly color is also bearish. No Q trade setup in SPY, and this pattern may be true for several other ETFs. Dow Jones Industrials ETF DIA, again the weekly backdrop is bearish. Daily recovered on Friday with a bull release signal, however there is a trendline resistance nearby. Not a time to take a long trade. IWM Russell 2000 ETF, this also displayed a bullish headwind signal. That is in the daily chart, however weekly color or shape, these are not allowing to take a headwind reversal long trade. Near the lower boundary, that's why we are not going to take any short trade. It's looking weak, however too close to the lower boundary to start any short trade, and no long trade setup is there. If at all any trade was to be taken in the USA market ETFs, that could be probably taken in QQQ, which has again started being the stronger of the ETFs. You can see the relative performance is now again tilting up. Why I say you could consider taking long trades in QQQ, not using the swing trade technique, not using the Q standard trade setups, but using intraday fine-tune chart. Why do I say that? Because there was a bullish headwind signal 1, 2, 3, 4, 5 days ago. So on Monday there was a bullish headwind. Tuesday price went up further. Wednesday it reversed, but Thursday it displayed a bullish headwind again. And from where did it reverse on Thursday? Precisely from the daily trend line. That is the memory trend line that we call. I have mentioned many times, if you see memory support in weekly or daily, then you may go down to the fine-tune chart, 5-minute interval in the morning session or 10-minute interval in the afternoon session, and look for very precise entry as price is reversing from that memory support. Keeping that in mind, you could probably take a very profitable, very low risk day trade in QQQ or the Nasdaq futures NQ on Thursday. You could book partial profit on Thursday as price went to day's high, and you could either close the entire position at the close of the day, or you could hold on to part of the position. One technique I use sometimes is that if I am trading using ETF QQQ, I close the ETF position at the end of the day and use part of the profit to buy a call option. If you did that, then on Friday you would have even higher profit. This reversal from memory support kind of trade was not only available in QQQ, it was available in several other stocks. Remember, in the last YouTube live session, I explained that if you are following me on the traders forum, sagarnandi.com, you would know that my last few shared ideas were not on the bearish side, though the market was weak. And I explained that is how I tend to be a little bit ahead of others. I think the last three ideas, all the last three ideas I shared were on the bullish side. One reason I explained in the last video also, that was because the market was already oversold and several instruments were near kind of support. You could use that memory support in QQQ to take intraday trade. And if you look at Tesla, by the way, if you look at the leading stocks, mega cap stocks, for the weekly interval, Tesla is the worst performer. Went down by a huge percentage, minus 7.8% for the week, even after considering that on Friday it went up by 5%. So before Friday it was down by almost 13%. On Friday it had a reversal. From where did it have the reversal? Actually from the memory support on Thursday itself. Looking at that, right when it was reversing above the memory support, you could take a long trade in Tesla, either using the stock or shorting the put, or maybe safer to short put vertical, use short put vertical. That would end up with a large profit by Thursday's close and even larger profit on Friday. Once again, you could initiate a trade using daily memory support. You could also sometimes use weekly memory support if that is there. In either case, if there is a daily or weekly memory support, you could go to the fine-tune chart and initiate an extremely low risk trade. That was true for QQQ. That was true for Tesla as well. And I will later on show from QFinder that you could take several trades in the same way. You could have probably booked partial profit already and you could hold on to remaining position. That is how, even in a volatile market, you can make money, even with short swings. Before looking at those trades, let's look at the sectors. Looking at the sectors from QH, Friday and over 2 days, the market turned around. Large percentage, 80 to 90% of the industry sectors and even stocks went up over 1 day period, Friday, as well as 2 day period. However, that was not enough to turn the week bullish. The 5 day period is still very bearish. 91% of sectors, 88% of industries, 80% of stocks, 81% are bearish. we saw from the market ETFs also, market is still weak. There is no bullish trade setup, and sector level is telling over 5 day it is bearish. This may not be a time to take Q swing trades. You may not find many Q swing trades using weekly daily interval because the leading stocks are not giving any Q trade setup. The market ETFs are also not giving any Q trade setup. However, using the technique that I described, the memory bounds, you could take some profitable trades this week. I will come to those trades, but let me first go through a few more sector analysis charts that I created from QH. This is a picture of 1 week ago. I shared it in the last market roundup. The red bars represent current week and green bars previous week. Therefore, 1 week ago, the market turned from bearish to bullish. 1 week ago, it was more bullish than bearish. 8 sectors went up, 3 went down. However, that Friday was weak. That Friday, though the week was bullish overall, that Friday was a down day. And what happened this week? From previous week's bullish picture, this is a week-to-week comparison as of current week. From previous week's bullish picture, now we have a bearish picture for the sectors. Only one sector went up, that is a defensive sector, utilities. All the other 10 sectors went down. Energy is the worst performer. Remember, in one of the recent videos, though energy sector was very best performer by far, I mentioned, because of the wild swings from up to down and the extremely narrow range in USO. Up down in the sector chart from QH and extremely narrow range from USO, I suggested even though energy was best performer, I was not going to buy energy stocks. That would be risky, and that was very useful because from being a very best by far performer, you can see the green bar is the largest one. So 1 week ago it was the best performer, again now it is the worst performer by far. So my caution was helpful, turned out to be helpful. Of course, I would not know beforehand, but it helped me protect my equity. Now, 1 week ago, the market was bullish, but that Friday was weak. And this week, the sectors are bearish for the week. However, how was Friday? This is Friday, last trading day's performance. Friday is actually strong. 10 sectors went up, only one went down, that is energy. If we take it as a mirror image of what happened in the previous week, then if we extrapolate, of course market doesn't always follow extrapolation, but if we look at it as a mirror image, it tells that it is more likely market will go up, at least in the beginning of the next week. And that is in line with what we saw from the market ETF studies, because all of them are oversold and several of them displayed bullish headwind and bull release signals. It may not go up much because the weekly picture, that is weekly ETF charts, are bearish, backdrop colors are bearish, and the sector graph we saw from QH is also very bearish on the weekly interval. Therefore, it may not go up much, but it may go up at least on Monday, Tuesday if the previous week's pattern continues. Now let's look at the market using Q Finder. We saw the weekly sector picture was still very bearish in spite of the strength of the market for Thursday, Friday. Weekly picture from QH was bearish, and if we look at Q Finder, that is the balance between bearish and bullish, all the Q signals. For the weekly interval, it is still very bullish. Sorry, not bullish, very bearish. You can see almost 90% of all signals almost 100%, 99% of all strength signals, and again 90% of trend continuation signals are bearish, very weak indeed. Only reversal signals are bearish but not so bearish. 58% of reversal signals are bearish, and that was probably expected because the ETFs were oversold near lower boundary levels. This is a very bearish picture, and we saw on Friday the market strengthened. Therefore we would expect the daily finder picture to be bearish, bullish. Friday market was stronger, so the daily finder picture on Friday was also bullish, and strongly so. 91% of all signals bullish, 80% strength signals, 90% trend continuation, and 97% very high reversal signals, 97%. And we saw several stocks like Tesla reverse from memory support. We saw QQQ reverse from memory support. This may be a time, if at all we are going to look for buying opportunities, we might look for them on Thursday and Friday using the reversal signals. Why don't we do that now? Click the bull signal. Now I have all the different Q signals on Friday, and you may see several of the stocks went up with significant percentage. You might look for trading opportunities from these stocks based on their price performance, or as I am going to do now, because there were several memory bounce, I am going to look for bounce opportunities. I can see there are 27 stocks giving memory bounce on Friday. Going to click the flag icon. I can see several of them were also having reversal signals. Let me flag them also. And those happen to also give bullish flow and bullish pressure. So these 4 stocks you could very quickly identify on Friday itself. And let's look at them using QElite. I click the grid icon that will copy the ticker symbols of the stocks for pasting in TradeStation Radar. I may right click and paste or type Ctrl V on the keyboard. These are the 4 stocks. What pattern did we see in them? Again, if I go back to Q Finder, all of them gave bullish pressure, all of them had a bullish flow, all of them touched and bounced up from memory trend line support, and all of them also gave a reversal candle. Each of these individually is a bullish signal, and together they are significantly bullish. One of them also had a possible pullback, meaning it recovered or regained the yellow white direction lines. Therefore, these 4 strongs are very strong technically. Let's look at them using QElite. DXCM. It bounced up from the memory support with bullish pressure, and it has a bullish flow also. You could find this stock during market hours, and then, as I explained, you could switch to the fine-tune chart. This is the fine-tune chart, the intraday template that Q traders, myself also, use for precision entry of swing trades or for day trades. In the morning session, I use 5-minute interval. You could identify this bounce setup in the morning session itself. You could use Q Finder, or if you use QElite, you might put your list of stocks in the radar, and you could, okay, now it is not showing. It is showing it in QElite, it is showing as bullish flow and bullish pressure. That might help you identify the buy setup. Now, if you found this stock either using Q Finder or Q Elite, you could then look at the early range high and early range low. Right when it broke out of early range high, you could take a long position, putting stop just below early range low, and then it went up almost in a straight line. This was your risk distance and your reward was much higher than the risk distance. You could book partial profit and hold on to partial position. This is a very powerful, profitable technique. Using trendline support, memory trendline support on weekly daily interval and then taking the trade using fine-tune chart. One requirement is of course that the early range has to be narrow so that our risk in the trade is small, which was true for DXCM. It may not always be true, but it was true for DXCM. Also, sometimes the stock goes up near the end of the day. Then I don't consider it to be a Q trade because Q traders or myself are not going to keep on watching the stocks for whole day. If we find a Q setup, be it breakout or bounce, anything from radar or finder in the morning session, then we may use the early range breakout to take the trade and book profit by the end of the day, at least partial profit. It's not my style to keep on watching a stock to see if it is breaking out near the end of the day. Whether it is breaking out near the end of the day or whether the early range is narrow, that we may not know always from the daily chart. That's why I may anticipate a profitable trade from daily weekly. However, I have to look at the fine tune to see the opportunity was already really there or not. DXCM gave a nice buying opportunity just like Tesla or QQQ did. And the next stock, LDOS, there is a memory resistance in weekly and daily both. Therefore, using weekly daily standard swing trade setup, we will not take a long position in LDOS at the end of the day. However, you see, we could find it near the beginning of the day as a memory touch setup. Bullish pressure might not be at that time, but it could be found as a stock that was hitting the memory support. Looking at that, you could switch to fine-tune chart again, and once again here also the early range was narrow. You could take a long position right when it broke out of early range. This should be your risk amount and your reward was much higher. This again gave a very profitable and very low risk entry in the stock. Looking at the memory resistance in daily weekly, I would probably not hold on to partial position in this stock. Let's look at DXCM again. We could take a similar trade in DXCM also using fine-tune chart, and in this case there is no memory resistance nearby. The memory is far away. Therefore, DXCM would let me hold partial position, but not LDOS. LDOS I would have booked full profit at the end of the day. Next stock we found from QFinder ARES. Again, it bounced up from multiple trendline support. Had a bullish pressure by the end of the day. Let's check from fine-tune chart if it indeed gave a low risk entry, and it gave. This was early high, this was early low. Initially it went down. However, we were not going to take any short trade because we were aware of the daily trendline support. Instead, when it broke out of the early range high, this candle, we could take a long position putting stop below. In this case, we would put it below day's low, not below early range low, because price could go somewhat below early range low. Our stop would have been just below day's low. This should be our risk distance, and again by the close of the day we had more profit than the risk taken. We could book at least partial profit. Was there any memory resistance nearby? No. The memory resistance is some distance away. Therefore, we could hold on to partial position. Notice that if you consider taking a long position in the stock at the end of the day, you might not take it because the weekly is not bullish, not neutral even. However, using fine-tuned chart near the beginning of the day, you could take a trade. That's the difference between using fine-tuned chart to make precise entries and to wait for the end of the day to confirm the signals. At the end of the day, there was no valid Q trade setup, but in the beginning of the day, using the technique of finding stocks at daily, weekly memory support, you could take a very precise, low risk, profitable trade in these three stocks: DXCM, LDOS, ARES. What about the last one, MAA, that we found from Finder? This is in fact looking nice on weekly and daily both. It has a memory support in both weekly daily. It's moving in a range, and when an instrument moves in a range, the best trading opportunities are at the edges. So this gave a memory bounce on Friday, and you could try to take the long trade using fine-tuned chart. But did we have a trade setup using fine-tune? Let's look at that. No, right? Because this was early range high, this was early range low, and the early range was quite wide. That was one reason we were not going to probably initiate a long trade even if it broke out of early range high. And the second reason is it broke out very late in the day. We are not going to sit in front of computer for all these hours to see if it is breaking out or not. Therefore, the two requirements that I have to use fine-tune chart to enter a precise trade, those two requirements, none of them were fulfilled. What were they? I needed a narrow early range, that was not true, and I needed the stock to break out early in the morning, at least before lunchtime, before say 11:30 a.m. Eastern Standard Time. None of those were true for MAA. At the end of the day, it is looking better. However, if you apply the unambiguous checklist, then you don't have any Q trade setup. And I didn't expect also, because none of the market ETFs leading stocks are giving proper Q trade setup using weekly, daily, unambiguous checklist. So many stocks would not give that. MAA also didn't give any proper Q swing trade setup at the end of the day. However, for the XCM, LDOS, ARES, you could identify the bounce from memory early in the day and you could take a trade, very profitable trade in each of them. Now let's look at some of the latest trades that I shared. How do I find them? I find them in the same way that I explained today. I look at the Finder home first, make a hypothesis what kind of trade I'm going to look at. In this case, I decided to look at reversal trades. Then I went to the bullish tab and looked for bounce trades that were also giving bullish flow, reversal setup, and high pressure. And I found some precise trades from them. The other technique is to not create any hypothesis, just look at the best performing stocks. And because you may run QFinder in real time, you wouldn't have to wait for the end of the day. Of course, you can also run it near the close of the day. That's also a proper technique. In that case, you'd be using the Q trade checklists. If you are using daily, weekly memory support bounds, then you might run Q Finder near the beginning of the day, let's say 9:35 a.m. Eastern Standard Time. The market opens at 9:30. You may run the finders, bullish bearish finders at 9:35, get the result and look at the best performers. Now if I looked at the best performers, would I find any trade? Let's look at them. Let's look at the ones that went up by at least 9%. And in this case, I'm going to open them using Q Global. I may highlight them and click the chart icon. Let me go through these stocks to see if there is any trade setup. I didn't prepare for it. We'll look at it together. And then I will review some of the recent trade setups. This is Penn National Gaming, PENN. It went up on Friday, big percentage gainer. However, there is no Q trade setup. Firstly, it is too close to the upper boundary, and also the candle color is not cyan yet. It's in an uptrend. The proper trade setup would be go with flow setup, trend following setup. However, trend following setup needs a bullish flow color. That is not there. I'm going to close it. TWST, Twist Bioscience. There is no Q trade setup. There is no proper breakout trade setup also. It did break out of the watermark resistance with a strongly bullish candle. However, doesn't have any bullish pressure or high activity. Therefore, I will not rely on the breakout. There is no Q trade setup, not even watermark breakout setup in my view because of lack of pressure or volume. Close that. VSLR, too close to upper boundary. It has a bullish flow, however too close to upper boundary. I'm not going to consider trading the stock at this point. Too overextended for me. Close it. Sunrun, again very strong performing stock, certainly in the same industry by the way as was the last stock. Solar energy, very strong. However too close to upper boundary. I'm not going to buy the stock. By the way, you saw two stocks in solar energy that are going up strongly, and the industry was also very strong. And now you may see why I closed my short position in Sun Power with a profit. I explained it in the last video also, and the trade is in my forum. I took a short trade in a very strong industry, and it went down for several days. That was enough for me to book profit. I was watching the industry weakened for a while, but then again it strengthened, and I used the only 3-4 days decline in the stock to book profit. And on hindsight again, my analysis turned out to be very useful for myself, because afterwards at least these two stocks went up. Probably the industry strengthened further. We may look at Sun Power also to see if it went up or not. In any case, I exited the trade in a timely manner based on my Q analysis with profit. Right now, Sunrun, ticker symbol is RUN, is too high up in the price level for me to buy. Close this. AIR. It is at a low price point, creating a nice base. However, it didn't break above the memory resistance. It broke above some resistance, but there are few more resistances. It had bullish pressure, high activity. If it could break out of all the memory resistances, then I would consider it as a Q breakout trade setup, because it was moving sideways and it is going up with high pressure, high volume, but it did not clear all the resistance trend lines. Therefore, I'm not going to buy it now. It can go into watch list to see if next week it can break out, but no trade setup right now. UPWK moving sideways, very bullish candle on Friday, however still inside the range, there is no trade setup. Also there is a resistance trend line nearby, not a situation where I like to buy. I close that. CCL Carnival, it gave a bull release signal, gave a bullish pressure also, however there is a memory trend line resistance nearby. I will avoid buying stock like that. Close that. INO, again a bullish candle on Friday, however near memory resistance, I'll avoid buying that. AXDX, this went up on Friday with a bullish release, bullish flow, bullish pressure. So this is looking better. If you are considering taking a trade in a range bound stock at the lower end of the range. Also I see there was a bullish headwind at the same lower edge. That bullish headwind could catch the very bottom of the stock. Amazing, isn't it? And now it has gone up on Friday with bull release, bullish flow, bullish pressure. This may be giving a low risk buying opportunity, but I'll come back to it. Look at the stock AXDX using weekly daily. Let's see if any other stock was in the list. Novavax. It went up on Friday, however closed below the memory resistance. One of them was broken, one was not broken, therefore I was not going to buy. Incidentally, if you follow my tweets and forum posts, right when it displayed the bullish headwind signal, I mentioned that if you were thinking of buying Novavax, the right time was not at the top. When it was above upper boundary, it displayed a bearish headwind. Instead, when it came down and displayed a bullish headwind, I mentioned right at that time, that was the opportunity to buy Novavax for a swing trade. If you did that, you already booked partial profit and you may continue to hold partial position. So far it is creating higher low. If it breaks out next week, you may continue to hold partial position. However, following Q guideline, you would have booked partial profit already and put stop so that as a whole the trade is risk free. That is the Q technique. Quickly take some money off the table, and if you want, if you see industry is strong, relatively at least it is strong, if not absolutely strong, relatively if the industry is strong, fundamentals are still good, you might continue to hold partial position. Right now on Friday I would not buy because of the trend line resistance. Close this. Workhorse went up on Friday, however traffic light candle color is red, daily candle color is bearish. I'm not going to buy it now. Close it. Norwegian Cruise Line, NCLH, similar to Carnival, that was also a cruise liner. It has a bullish candle with bull release, bullish flow on Friday. However, there are multiple trend line resistance. Therefore, I'm not going to consider buying this. Close. CHDN. It went up with a bullish headwind, bullish pressure, bullish U-turn, high volume, bullish flow, many bullish signals. For my liking, it is a bit risky because the risk amount is this much. My stop would be below the recent low. Entry would have been at Friday's close if I considered buying it. This would be my stop, and logically I would put my initial profit target at the memory resistance. That would make my reward risk ratio very small. That's why I would not consider buying Churchill Downs on Friday because the reward risk was not attractive enough. And if you remember my tutorial on diary, I would fill the diary up, the planning step, and that would show me my reward risk was not good enough, and even if I started filling it up, I'll scratch the idea. Went up strongly, but reward risk was not good enough for me to buy the stock. Now we are left with this stock AXDX. It could be considered as a buying opportunity at the lower edge of a range, whether you consider a range bound by trendline resistance support or whether you consider the range bound by watermark resistance and support. Before confirming, let's look at the weekly daily together. AXDX. The weekly is also neutral in color, bullish in shape. So weekly is allowing us to take a sideways market box kind of trade setup. If we look at the same stock using TradeStation, AXDX, this is giving the same signal. Sometimes there is a slightly different signal between Q Global and Q Elite because of the underlying platform differences, but both of them are giving the same signal. It could be considered a buy at the edge kind of trade. But before confirming that, of course, I would like to check its fundamentals and industry. Let's do that. AXDX. I go to Q Vital, check out its fundamentals first, AXDX.O. And while it is retrieving data, could you see that I picked up the best performers on Friday, and it was not easy to find any low risk buy setup. When that happens, the market is telling it is not time to load up on new long stock positions. That was one thing that we can learn when we went through all the stocks. If the market was telling to buy stocks, then you would have found many trade setups by now, but we didn't. We could potentially find only this one, AXDX. AXDX, in terms of valuation, it's overvalued. Earnings growth is positive but not great. The industry was very strong on Friday. 95% of the 86 stocks in healthcare equipment went up. The industry was very strong. Short squeeze potential is there. You might consider the fundamentals are not great, neither an undervalued stock nor a high growth stock. So fundamentals are at best mediocre. Still, the industry looks very strong in itself. Let's check out the relative strength using QH, and the relative strength is also strong. So fundamentals are medium, industry is strong, technically it's giving a low risk buy setup. Now if you again started filling up the diary, you would see it is not really what at least me or traders like me want to do. We want to align fundamental, technical, industry together. Therefore, you may consider taking a trade. If you go through the planning step in Q diary, that would alert you that no, let's not take it, because from our learning from the Q diary insight over months, we know that we get best result from the trades where industry, fundamental, technical, market, everything is aligned. Here the fundamentals are not aligned, therefore I would not actually buy. That is also a part of Q technique. However, this industry is something that I am aware of because in these or similar industries, I have already bought a stock that I shared in the forum. It was FLGT. Let's search for FLGT. This was shared 5 days ago. healthcare services. So just now we looked at a stock at healthcare equipment, and I knew these or related industries were strong because I traded FLGT in healthcare services related industry, and I made a good profit from it. Not only that, if you look at my last few ideas I mentioned, I will review some of the latest ideas, and let me do that now. This is what I shared. When did I share? 2 days ago. So that was September 25th on Friday, isn't it? Yes, Friday. Friday I shared VRAY, and as I mentioned, my last 3-4 ideas all were on the long side. Healthcare equipment again. Strong industry on Friday. Gaining strength if you look back. Cyan represents strength, magenta represents weakness. This is what I shared on Friday. By the way, I shared it around 11, no, 1:10 p.m. 1:10 p.m. 1:10 p.m. For confirmation, you would wait for market close. You could use Q technique to enter a trade either near market open or near market close. In the middle is no man's land for Q trades. So I shared it around 1:10 p.m. and here the valuation was not great, however it was a high growth stock. And when I shared it, the stock was already up by 4.4%. The industry was very strong. So the industry was relatively strong, and in itself also it was strong. The stock had a short squeeze potential also. So in this case, unlike the other healthcare equipment stock we saw just now, AXDX, same industry. AXDX is in same industry as VRAY, but you can see I would prefer VRAY because same industry, strong industry. However, VRAY was a high growth stock. I look for either undervaluation or high growth. Here it was a high growth stock in the last quarter. And then I looked at the technicals. Technicals were also looking good. Unlike AXDX, which is about to move up from a very low price level, this stock is already in an uptrend. If there are two stocks in the same industry, I have told many times, I prefer to buy the stronger one. And this is stronger because it is already in an uptrend. On Friday, it also regained the white direction line. It was already above yellow direction line. It had a bullish flow, bullish shape candle. The weekly backdrop was also bullish. Weekly shape was also bullish. This was giving a valid long trade setup on Friday, and you could find it from Q Finder, or let me put VRAY in Q Elite Sonar radar on TradeStation. Both of the stocks gave bullish flow. However, fundamentally VRAY is stronger. Technically also it is stronger because it is already in an uptrend. If we look at weekly daily at the end of Friday, the weekly is still bullish. Daily ended with a small upper tail. When I shared the idea on Friday, I mentioned that look out for price to break out of Thursday's high. Why? Because Thursday created a long upper tail candle. To be sure about buying the stock, I would prefer it to go above that Thursday's high, but it didn't do that. If you look at the forum post, you can see I mentioned about it. Watch for the stock to close above yesterday's high, Thursday's high by today's close. Why? Because Thursday's candle had an upper tail, and before buying I wanted to make sure that the bearish traders who created the upper tail. On Thursday, they were overpowered by the bulls on Friday. That didn't happen. Looking at that, you would not buy on Friday. That is how we may plan for a trade. Everything else was great as per Q technique, except that it didn't clear Thursday's upper tail. So you may keep an eye on the stock. I would probably put it on my sidebar here and watch if Monday it can go up. Using fine-tune chart, I may take a low risk entry. So V-Ray was a long trade idea that I shared. Let's look at some more. Let's look at 3 latest ideas that I shared. And you will see all of them were in the long direction. I was not considering bearish trades when the market was already down. VRAY, the first post was about that. The next one was about CDE. This was also a bounce trade setup. A gold miner, and I created these charts from QH. Gold miner, if you look at the percentage performance, the industry turned around from negative to positive and the score jumped heavily when I shared the idea. When did I share it? I shared it on 25th September. The industry was very strong and accelerating. It was strong after prolonged weakness. Before that it was strong. Then it was weak, and right when I shared it, it was very strong again and accelerating. The industry allowed me to buy a stock and I found CDE, medium valuation, however great earnings growth, short squeeze potential. In itself also the industry was very strong. The stock was up by 5.7% when I shared it. And if you looked at the technical charts, it gave a valid bounce long trade setup. In addition, it had a bullish headwind signal. Bullish pressure was there, bull release was there. It had a memory support not only in daily but weekly also. This gave a valid bounce long trade setup. When did I share it? That was on 25th September. Probably Thursday's market close. Let's see how it went on Friday. CDE. Yes, I shared it based on Thursday's market close analysis. On Friday, it tried to go down, but again the memory support held. Therefore, if you took a long position on Thursday, you are still in the trade. In fact, I took a long position on Friday using fine-tune chart. I found it after market close. In fact, I found it while answering a question from one of the Q traders. One person asked me some questions. In reply to that, I shared some gold mining stock. I further analyzed gold mining peer stocks and found CDE. That was Thursday after market close, and on Friday I was watching it using fine-tune chart. And let's look at it. Initially the stock went opened down, not much. This was Thursday's close. Opened down little bit on Friday. Didn't go down below early range low. Instead it went above early range high, and somewhere here I took a long position and I am holding on to the long position. It was not a day trade. My stop is just below Thursday's low, and if it comes to the trendline resistance, then I will have more profit than the risk in the trade, and that would be my initial profit target. So this was also a long trade setup. Let's go through one last trade setup that I shared. Unit cop. You may go through the post. Let's just go to the chart. UNIT. Remember when I shared in the post first time, you may look at it, the weekly backdrop color was magenta. However, I looked at it as a stock that was holding to support, and I found the stock on this day, and I mentioned that it needs to break out of the memory resistance. Even then it was not the ideal Q trade setup because there was another memory resistance. The breakout didn't happen for next 2 days. On Friday it actually broke out of the memory resistance. How was unit co-op's industry on Friday? By the way, even if we find the industry to be strong, I think the fundamentals were okay. That's why I shared it. However, remember, this is not a proper Q trade setup. You may observe these trades to hone your skill on Q systems. You may not want to take it, especially if you are using Q diary or equivalent trading journal. The moment you start to fill up the planning steps, you would know. You will tell yourself that no, here the technicals are not best. There are other better trades, if not today, tomorrow. And those are the trades that give me the real profit from the market. So let's avoid it. No harm keeping an eye though to hone your skills on Q systems. If we look at units industry, let's start with the fundamentals using Q Vital. Specialized rates. While it is retrieving fundamental data, let me look up its industry. Yes, industry is strong. So industry wise, it's allowing us to buy. And that is what I observed when I initially shared the idea. Remember how I shared the idea as a turnaround candidate, because the sector was down very much. Beautiful, isn't it? I could catch it right at the time the sector was turning around. Now the sector is up for 2 days. I could catch it right when the industry was also strengthening. The fundamentals are great. Very high growth stock, medium valuation, short squeeze potential. On Friday in itself also 95% of peer stocks went up. Very strong stock in terms of fundamentals. Industry is strong, turnaround candidate for industry, turnaround candidate for sector, except the technicals are not great. In such cases, instead of using the daily weekly technique to take a trade at the close of the day, you might consider taking a trade near the beginning of the day using fine-tuned chart. If you did that, then on Friday you would be in the trade at this point when it broke out of early range high. You would put stop for the day just below early range low. Even if it was a swing trade for the day, you would put stop below early range low to minimize risk. At the end of the day, you would notice that it closed higher and it broke out of the daily memory resistance. In that way, you could take an early entry, precise entry using fine tune and hold on to the trade. If you look at the end of the day, end of the week, Friday, then I might not take the trade. And even if you took the trade, you would probably need to log it on Q diary as -1 score in terms of execution, in terms of 360 degrees analysis, because this is not the trade that we really want to take repeatedly. As you saw, the last few trades I shared were all on the bullish side, while people were probably bearish. And I took short trades here, booked profit in short trades here, started considering long trades at the bottom. That is how I am anticipating ahead. And you may see that that is working pretty well, because I am not taking the trades based on anticipation. I am anticipating, analyzing, but I am using very robust Q technique, using the diary only when all signals are aligned, and I am able to take the trades little bit ahead of others by doing that. What is my market view now? Market view is weak, certainly weak, but it is oversold. So I don't look for bearish trades now, as I showed from my forum posts also. My preferred trading direction is actually on the bullish side. actually on the bullish side, because that direction, long direction, will give me low risk buying opportunity. Short direction may not give me easy low risk shorting opportunities right now. Of course, again, I will use my Q diary, fill up the planning steps, and see if there is a low risk buying opportunity using the Q trade setups. And if it is there, I'll confidently take it. If some trades make loss, that's fine. As I shared in my performance of the Schwab account, I'm just targeting 60% success rate. Actual success rate so far has been, so far as per my last sharing, was more than 70%. I'll share my result again in the Wednesday's traders meeting. Let's see whether it is coming down or staying at 70% success rate, and whether the equity curve is going up or not. That is all I wanted to share in today's session. We are at slightly beyond 1 hour time frame. Let me end today's session. Thanks a lot for joining me. I look forward to seeing you in my next session, that will be on Wednesday, 8 a.m. Eastern Standard Time. Have a great weekend. Keep safe and trade profitably. Thank you.